Jack, how would you follow this obviously at a granular level? How would you sum up the year in gold?
It's been a remarkable year. It's kind of been one of those periods of time when gold, I think, has managed to punch its way into the mainstream of kind of the debate in financial markets. And I think that has been mostly just a reflection of its price. You know, it's up about 63% now, something like that, which, as you say, is its best year since 1979. And then I think, as well as that, I think it's been what's driving it. And there's been all of these various developments coming out of the White House, for example, which have been kind of bullish drivers for gold. And that has pushed it into the headlines in a way that it hasn't been for years, I think, maybe since the 1970s.
So talk to us about what's been coming out of the White House and some of the other catalysts, whether it's central bank buying or ETF flows, and what has been underpinning this pretty remarkable rally that we've seen.
Well, there's a lot of kind of buyers that you could point to. You could point to, obviously, the ETFs. This is really the year when the ETFs came back. So usually it's kind of a pro-cyclical thing. The gold price goes up and investors buy ETFs, which is unusual, but they buy in when the price is higher. That hadn't been the case through 2024. There'd been continuous outflows. There'd been investors taking profits even as the price rallied through 2024. And then this year was when the two lined up. Investors were piling into ETFs and the price was rallying. So they bought more than 500 tons this year, which is a big addition when you look at the margin. And so that's been, I think, a really important driver of the price. Then obviously we have central banks. This is the big story with gold, that really this is something that they've been buying. They've been net buyers since the global financial crisis. And it's been since 2022 when that buying has really ramped up to about 1,000 tons a year, up from about 500 tons a year. And that, again, has been a really important addition at the margin, which has kind of supported prices. And they tend to be quite price inelastic in their purchasing habits. So that's quite a useful driver for the price, as it maybe doesn't tend to be as, it doesn't contribute to volatility in the same way. And then you look at why they've been buying. There's many different reasons, but I think most of them come down to the new administration. I think one of my colleagues said the other day, you know, gold loves Trump. There's been, earlier this year, we had Liberation Day. People were talking about the Mar-a-Lago Accord. More recently, there's been all these narratives, the debasement trade, all this kind of stuff.
Well, he's put half of it in the White House, hasn't he, as well?
Yes, exactly. Yeah. Maybe that's what's been driving gold higher. Yeah.
Hey, Jack, what's the outlook then for 2026? I've seen targets of 5,000. We're at just below $4,300 per troy ounce for gold right now. I've seen people coming out confidently saying we're going to get to 5,000 by the end of 2026. What is the outlook? What are you seeing when you speak to analysts and those in the space?
I think Goldman Sachs had a really interesting note the other day. They're calling for 4,900 by the end of next year. They've been kind of quite consistently bullish. One of the things they identified, which I think is an interesting theme, is if you look at in the portfolios of private US investors, how much of their portfolios of equities and bonds are in gold. Actually, it's a really tiny amount. It's less than 1/5%. And so they've identified, they think that a 1 basis point increase in that share gets you a 1.4% increase in the gold price. And it still is really marginal. So I guess an important part of that is, if these narratives set in about the debasement trade, maybe, you know, you feel less safe holding treasuries, you're worried about the purchasing power of your dollar, and you don't see many good ways to hedge that. If that really sinks in with US retail investors, this vast amount of wealth that's held in private portfolios in the US, that could be a really important driver of the gold price going into next year. And that's one of the bullish factors they identified.
Okay.